Good morning. It's Thursday, August 22nd, about 6 a.m. Central Time. Overnight, the precious metals are awfully quiet here after yesterday's kind of wild but flat trading session. Yesterday, we saw big volatility in the precious metals. However, gold futures ended up settling down $3 on the day. In September, silver up about a penny and a half. Now, looking at the overnight session, gold down about $5. That's the December contract at $25.42. September silver up 7 cents at $29.61. December copper down $1.85 at $4.20, and October platinum down $4 at $9.69. So markets are a little changed here. U.S. equities slightly positive, dollar index slightly higher. Treasury yields are essentially flat here. So no real action, no big bang here in any of the markets in the overnight session. So yesterday's big announcement here with the payroll data, the preliminary revisions to U.S. payroll numbers, indicated the largest markdown in workers since 2009, and that the labor market had started to weaken much sooner than people had thought. The Bureau of Labor and Statistics said that actual job growth for a 12-month period up to March of 2024 was nearly 30% less than initially reported. Sounds like one administration was fudging those numbers here to mark up that economy. Probably taking some victory laps here after some of those numbers as well. So the U.S. economy had created 818,000 fewer jobs over that time period. Now, there is a funny story that number was supposed to come out at 10 a.m. Eastern. We were all watching it, and there was big volatility in the market, but if you looked at the financial news reporting, nobody had the numbers. We were checking Twitter, we're pinging back and forth on, Google chats and things like that with other traders trying to figure out what the number was. Well, there were three big banks that got the numbers. And you know how they got them? They just called into the number. There's like a hotline number that they give you the data on, and it comes out at the same period of time. Who would have thought that? So kind of funny there. No, I don't think really anybody was able to capitalize on it too much, but who knows, So getting into it later in the session, we had the Fed minutes come out, and they suggested that September interest rate cut definitely on the table here. And the minutes also said that Federal Reserve July meeting showed that the majority of Fed officials saw that September rate cut as appropriate, but also a few of them wanted to do so at that July meeting. So it seems like this is really our best opportunity in here in September for that interest rate cut. And that sets the stage for Chairman Jerome Powell. He'll discuss the next phase of the Fed's inflation battle at that Jackson Hole meeting. And it starts today and it ends tomorrow. So that's really what we're going to be watching. And then we're also going to watch a couple things coming out here today because it's really important. We're going to have the unemployment claims. The numbers expected 232,000 jobs. That uptick there, 227,000 was the last week's number. And then we're going to have flash manufacturing PMI data. 49.5 are the expectations, and flash services PMI at 54. So those are really important numbers. They will move the precious metals markets. Remember, silver and copper, big time as far as manufacturing is concerned. So you're going to want to watch that. And then the services PMI number kind of tells you, what the way that employment costs are affecting those types of things as well. We'll also have natural gas storage. And then finally, that Jackson Hole Symposium starts off with day one here. Now, getting into the markets here and getting into gold, silver, copper, things like that. The gold market and silver market have been flat the last couple days. And really, on my proprietary trading system that uses trend discovery, was really looking for this breakout in the silver market, and it still remains in a bearish trend, and we have not popped up enough on the silver market to trigger a neutral trend to start threatening an upside bullish trend. So we're going to want to continue to monitor some of this data and things like that. Now, the gold market, historically, September has been a terrible month for the precious metals markets. I've looked at things on various seasonalities, mapping out September in the month of September as far as how it impacts prices, and prices have essentially gone just straight down for whatever reason, and then they begin to recover in the later part of September, and they generally rally. If you look at on the December gold contract, they generally rally until about October 25th. So we look for that bottoming action in late September. So what a lot of traders are doing is they're actually buying some put options, they're tightening up stops, they're reducing some of their exposure on the precious metals. And I know these are every season seems different from the next. We've got Jackson Hole, the Fed's going to cut rates, things like that, blah, blah, blah. But the reality is that sometimes these seasonals, they tend to play out. So I think that you take it with a grain of salt. You look at maybe some cheap longer dated put options that'll get you through the month of September if you're heavily exposed in the precious metals markets, or you reduce and look at call options. That way you have calculated risk, and if the market breaks out to the upside, you've got that exposure in place. So getting into the September silver contract, which realistically you should be trading the December contract. I'll probably only quote it up until tomorrow, this September, but we need to close above really 29.60, 29.70 in order to flip that to a neutral trend, and then we need to get above 30.05 in order to get that breakout on the markets. Now stochastics look great, the average true range has come down, which means that some of the volatility has come out of that silver market. We're only moving about 86 cents here a day. The copper market essentially flat and consolidating at the 200-day moving average, has reached overbought territory in the stochastics, but it just means that it's turned into a small bullish trend. The problem that you have is that DMI plus and minus are really just intertangled at the moment and not really giving any kind of clear, decisive widening, which would show that the strength of that upward trend is starting to increase. Now, one of the markets that's on my radar is the crude oil market. It's really been bludgeoned the last few trading sessions, about 6-7 trading sessions since we peaked at 80. We've almost come down to the low 70s here. Now, a lot of people are saying that the weakening economy, also the peace deal, and also China not really buying, those are the three main drivers. We're also coming up into an area where the driving season is ending, and then also the economy is weakening. So those are all the things that are really going to affect the crude oil market, and I think that's what's brought it down here. The bears seem to be fully in control of the market. However, I'm looking much farther out here on the contracts, because one of the benefits on crude oil, the farther you go out, the cheaper the price is, and looking for, hey, when will this recovery start to take place, at least for a short-term picture here. So we're going to start looking at December all the way through March of 2025 on the crude oil contracts for any kind of opportunity there. If you got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.